Okay, take two. You'll notice there's a lot of lines on the charts we're going to talk about because I just recorded this, but forgot to turn my microphone on. Anyways, for the week, we were kind of all over the place. The S&P and NASDAQ lost a little bit of ground, as did the biotechs. On the bright side, we had oil again adding to last week's gains. Big month for oil, of course, up 21%. Energy names are up half that amount. So, the move in the commodity doesn't always equal the move in the underlying stock. Let's take a look at these charts. We'll start with oil because oil, as we know, took off last week on the Iran news and, back up through this prior band of support, which was broken. And it trapped a lot of short sellers under there. And a lot of speculative longs got out as it broke back below that. Now, we rallied right into this trend line last week, and we've spent this week kind of digesting the moves up just below that. It seems to me as though as long as we stay above probably $66 for a barrel of oil, that will continue to be a bullish trend. And unless things really accelerate in terms of news in the Middle East, then it seems like it's just going to spend some time digesting these moves. As far as cryptos go, I sold my Solana this week. I'd mentioned that to subscribers. Ethereum, I still have a small piece, but it's looking like it's in danger maybe here. And Bitcoin just seems like kind of a waste of time in here. Still having trouble with that prior high, and I'd love to see it actually dip down below 100 and come down to the April 7th low anchor, and perhaps that would be a little bit of a shakeout that could get Bitcoin going again. As far as the ETFs go, in the S&P 500, we're below the declining 5-day moving average. That's that orange line. I've been saying that I expected this market to hit a new all-time high, and I think it's still likely it will, but that's clearly been delayed for a little bit in here. We have this pattern, as I mentioned. I've already drawn all the symbols, the lines on there. So we have lower highs and lower lows below declining 5-day moving average. That's got me cautious. I did a post about the, what a lot of people are calling a bearish wedge in here. You can see that on Twitter, and I showed some previous examples of that. And really, the key to that has been the 20-day moving average. So I think that early next week, if we get as long as we stay below the declining 5-day moving average, the market is a little bit vulnerable to some deeper selling. We've had a really great couple of months here to the upside, and breaking below this level in here, I'd like to see it rally up, then maybe break down, then perhaps we're going to head for a test of the 200-day moving average again. If it's going to recover, I think it needs to get back above 600 to be considered more neutral in here. So as long as we're below 600 for now and that declining 5-day moving average, I don't want to be a buyer of the S&P 500 or most stocks really, because most stocks are in the same type of situation. The NASDAQ is right at the prior band of resistance, the 20-day moving average, and the anchor off of the May 23rd low right here. So I think if you get a bounce up, don't get too excited about it Monday morning, not while we're below declining 5-day moving average, because if it rallies up and then fails, I think it's highly likely it's probably a decent near-term short here with a stop above Monday morning's high, if this sets up. It's not a prediction, but it's just, a potential scenario. Otherwise, if the market continues to stabilize here and doesn't drift down any further, I think as long as we're below 530 and the declining 5-day moving average, you've got to go slow to the long side. The Russell 2000 is maybe in a better position than some of these other markets. As we know, it just recently got rejected at a 61.8% retracement of this peak to this low. That's that line right there, 61.8%. And that was also, of course, the 200-day moving average right in here. So the sellers showed up where they were supposed to, and now they're pulling back to this prior band of resistance. Resistance broken tends to act as support, and so far it is acting as support. Whether it continues to or not is anyone's guess. But if it does, what I think we want to see is maybe a rally up Monday morning, and then we start to pull back a little bit. That 5-day moving average will flatten out and start to turn higher. Then perhaps the Russell 2000 could be a buy right in here with a real tight stop below this low or here. As long as we're above these levels, then it's kind of neutral right now. And as long as we're below this area, we're neutral. So we're kind of stuck in this range, looking like it has the potential to move higher. Semiconductors, they broke their first band of support in here. I don't know what that line is, so let's get rid of it. They broke their first band of support in here, and you can see as it did, it came down very quickly. If this acts as resistance in this general zone on Monday and Tuesday, while we're below the declining 5-day moving average, so we haven't had that for a while in the semiconductors. We were only briefly below declining 5-day moving average, but this time maybe we're going to see something a little bit different. We're at the month-to-date anchor. If we break down, rally up, and then you've got to start looking at some of these other low levels, such as the 20-day moving average. If we are still below 261-ish, then I think it's going to take a little bit more time before we make an assault on that high. So below 261, be a little bit cautious. If it can, heal quickly, get back above there and do something like this, well, then it seems likely that this will have trapped some short sellers and we look to move higher. I think the most likely scenario, though, is that we see a little bit further profit taking. Biotechs, let's just start over here again. I'll get all that out. Everything I've drawn on the previous recording. Anyways, we're at the rising 20-day moving average, and we're also at this thick blue year-to-date anchor. Below that, we have a rising 50-day moving average. Above, we have the 200, and that makes for a nice place where this market could potentially rally up towards if it's going to get out of its own way. The issue here is on Monday, we'll get rid of this data. Tuesday we'll get rid of this data. So in order for this 5-day moving average to start to advance, even if we rally up on Monday like this, that 5-day moving average will continue to decline. So I wouldn't trust a rally like that. If it does this, and let's say that's Monday, and then on Tuesday we do something like this, well, then we'll be getting rid of this data, meaning the 5-day moving average will start to rise. And then if we break above this level, I think that the biotechs could be maybe a bright spot next week. And that's a lot of things that have to come together. I wouldn't buy it down here expecting this to happen because we're below declining 5-day moving average with lower highs and lower lows. So if it's going to turn higher, this is the scenario. This is a level of interest. The year-to-date anchor and the 20-day moving average are a level of interest that we're looking to potentially see hold. If it can hold and build out for a couple days, create some higher lows in here, then we could be a buyer somewhere along this area with a stop underneath the higher low that makes most sense to your time frame and your risk tolerance. One of these higher lows if it was to develop in this way. So keep an eye on the biotechs next week. Energy names held on to their gains, and this isn't a prediction of what I think they're going to do. I'd love to see them pull back down towards the year-to-date anchor, though, down in this 86 level. They're getting extended. They behave well. They're still showing these higher lows in here. So it's still innocent till proven guilty. The problem is the more stretched it gets, the more likely you're going to see a pull back like this. Now, again, energy names are up 10% year to date. Oil itself is up 20% year to date. So I think that when you look at this, as long as oil continues to hold above that, what did I say, 66, 67 level, then things are going to start to look a lot better for energy names going forward. Amazon was stopped out this week as it broke just today, that final third, and on average it was about a 2% gain there, nothing special. SMCI, I've got a 2/3 position in here, actually a 60% position in that one. Apple continues to just trade terribly here. There's nothing really interesting about that. Here's some potential scenarios for Tesla, and you could look at this and say, well, I could draw that in, Brian, and say, maybe it's going to go up, maybe it's going to go down. What I'm saying here is this is a key level. This was resistance this week. It was the prior band of support which acted as resistance. So when we draw it across here, this is clearly where support broken is acting as resistance right now. And that is important, to know, of course. So when we look at that, that's the key level, 332-ish, and I'd love to see it rally up, pull back a little bit, and then be a buyer here with a stop underneath one of these levels. If instead it breaks down, Well, it doesn't matter. Maybe you want to be a short seller. I don't think I want to be a short seller because where does it have the potential to go? Maybe down to the 50-day moving average and the year-to-date anchor. So I'm looking at this with a long bias. We've got a 20-day moving average that's a little bit declining. So it's reasonably you could say it's pinching between the 20 and the 50-day moving average. But if it breaks below the anchor from the Elon news back in here when he kind of went off the rails a little bit, that's clearly where the buyers are showing up. So this is your most recent relevant higher low at 314.5. If it breaks below that, then I will no longer be looking at this as a long candidate. Hope you had a good week of trading, and I do this analysis every single day for subscribers. Take a look at alphatrends.net or alphatrends.net or on Twitter on X for just $10 a month.